What's up, gang? It's Zilux, and I'm back with another video. Today is going to be another episode in my Day Trading Noob to Pro series, and I'm going to be going over the different futures contracts you can trade and what it really means, and also how to know when to switch to the next contract. So to start off, these are your options for what you can trade the NASDAQ on. It's the same with any other future like ES or YM, but essentially this NQ1 right here is going to be the continuous contract. So let me show you an example of that. I'm already on it. So essentially, because it's continuous, it will combine all of the yearly contracts into one big one. Meaning if I go to the monthly, I can see the entire history of the NASDAQ futures since it was created back in 1999. But if I were to go to, let's say, NQZ, which is the current contract, you can see I can only see back to 2022. And even then, if I go to like the 1 hour time frame, it gets scuffed around here, being August 2025, because the reasoning for that is these contracts right here, that is when they expire. So NQU is what we were using throughout the summer, and we're in September now, so that means it'll expire. And the contract will expire on every third Friday of the month, being what we're in. So September, it's currently 9/18. Tomorrow is Friday, which means the contract will expire on Friday. So that means that everyone trading NQU should go to NQZ. And the reason why you don't just stay on the NQ1 continuous contract is primarily because there are some differences between the true data, being the NQZ, NQU, etc., and the continuous contract. And I'll try to find an example. So I already found a good example just looking at the chart. So if we see this 1 minute candle right here, you can see there's a giant random just gap, right? And it's not a new week opening gap. It's not a new day opening gap. It's literally 10:32 a.m. on a Thursday. So if I go to the contract that we're on right now, NQZ, right here, you will see that gap does not exist, right? The candle data was accurately presented right here, whereas on the continuous contract, NQ1, it was not. So that is why you want to actually learn about how these contracts work and when to go to the next one. Now you might realize that I said the third Friday of the month that expires in that you change to the next one, right? And you might be like, wait, why are you trading NQZ if it's not the third Friday yet? And I'm going to explain to you how to know when to go to the next contract, because obviously we haven't hit that Friday yet, so why would I be on it? And basically what you want to do is when it's approaching that date of that third Friday of the expiration date, so you want to go to this website here called barchart.com. All you have to do, you just type in barchart.com and boom, it pulls it up. And what you're going to do select a commodity, and you're going to scroll down here to the NASDAQ 100 E-mini. And that will tell you all the contracts that are possible. And you're going to ignore this top one up here, the cash one. I don't know what it means, but it doesn't mean anything. So then you're going to see NQU and NQZ, or whichever one, is currently active, depending on when you're watching this. So it's not Friday yet, right? It's Thursday. But you can see NQU right here and NQZ right here. NQZ has the higher open int value. That's what you want to be looking at. So whichever one has the higher open int is the one you want to trade on. So NQZ is obviously the higher number here. So you don't want to be looking at NQU at all. You want to be charting and doing everything on NQZ. And now that you know that, I'll kind of just show you why you don't want to be on the lower open int chart. So if we look at NQU here, right, let's say you didn't know that you should be switching before the third Friday of every month, you might see all these random volume imbalances here, right? Like volume imbalance, volume imbalance, volume imbalance here, here. But if you look at NQZ, sure, we still have a little bit of that just because that's how, the charts work, like here. But you can see there are way, way less volume imbalances than NQU. which means the chart is more accurate. This is the same thing. It looks a lot more clean and put together, and that is why you need to be checking barchart.com, checking the open int value, and making sure that you are on the correct one. But that's going to cover it for the different contracts of the futures market. And like I said here, NQ1, you just mainly want to use that for back testing because that'll let you go further in the past. And then when you're live trading, you want to be on the correct contract for the quarter of the year. And you want to be looking out for that third Friday of the expiration month. So that's going to wrap it up for this video. I hope it was informative. Shout out to ICT because he actually teaches this in his 2022 mentorship, but he yaps a lot. So hopefully this was a little quicker and easier to understand. And of course, if you guys have any questions about what I talked about or just anything regarding trading, make sure you leave them in the comments below. Make sure you like, comment, and subscribe. Turn on notifications for my channel. Never miss a video. And make sure you guys check out my Instagram and my TikTok. I upload trading videos, just recaps or whatever on there. And I'll see y'all in the next one.